The market is finally showing signs of life today. Palantir just stabilized at the $100 range. People are bullish. However, some people are still skeptical about it, saying it's extremely overvalued. Over $85 billion isn't an easy task. However, analysts quickly stepped in and shed some light. And here's what crazy: Wall Street joined in and dropped massive bombshells. What is happening? How will all of these make sense? And what on earth am I even talking about? Well, let me explain. Disclaimer. Palantir is showing some serious strength right now, even after soaring to a new all-time high around the $100 mark following its Q4 earnings report. It didn't crash like some expected. Instead, it held its ground, proving that this wasn't just a quick spike, it had real momentum. At first, people were skeptical. Some thought it was just a temporary surge and that a sharp drop was right around the corner. But that never happened. Palantir stabilized, holding steady at around $100, and that completely changed the vibe. Now it's clear. People are saying that Palantir has officially stepped up to the next level. But of course, not everyone is convinced. The bears are still out there, calling it overvalued, saying it's just a bubble waiting to pop. A Twitter analyst even summed it up perfectly, saying, "Goodness, all Wall Street does is price chase. I strongly believe Palantir is a bubble too. Difficult to time the top, but eventually, it will fall." And that's the thing. Palantir has always been a stock that sparks debate. It's never just been another tech company. It's a bold bet on the future. Whether you believe in its long-term potential or think it's riding on hype, one thing's for sure: Palantir isn't going unnoticed. The numbers around Palantir right now are honestly pretty wild. One Twitter analyst pointed out something really interesting. He said that Palantir, with its $230 billion market cap, is worth more than Boeing at $130 billion and Lockheed Martin at $107 billion combined. That's a huge comparison when you think about it. These are massive companies with decades of history, and Palantir is now valued higher than both of them put together. What makes this even crazier is that Palantir hasn't been around nearly as long, and it doesn't have the same legacy or mainstream recognition that those giants do. But still, here it is, commanding this massive valuation. It's a sign that investors are seeing something big in Palantir's future, whether it's the potential for growth, its unique technology, or the idea that it could play a crucial role in the world of data analytics and AI. But of course, this kind of valuation is a double-edged sword. Some see it as a bold move into the future, while others think it's all a bit too much, too fast. It's definitely a situation that gets people talking. Palantir is now in the big leagues, but the question is, can it live up to this huge valuation in the long run? And on top of that, people are definitely getting a bit nervous about Palantir's crazy high PE ratio of 425x, thinking it might be way too expensive. One Twitter user even voiced his concern, saying, "I think Palantir is great, but the 425x PE scares me, should it?" And that's a fair point, right? When you see a PE ratio that high, it's easy to think the stock is way overvalued, like the price is already too far ahead of its actual earnings. But hold up. There's actually a pretty interesting take that's been spreading like wildfire across the internet. An analyst recently explained that just because a company has a high PE ratio, that doesn't automatically mean it's overpriced. To make his point, he referenced the wisdom of one of the most legendary investors, Warren Buffett. He pointed out that looking at the PE ratio alone to judge a company's value is like saying someone can't climb Mount Everest just because the mountain is big. The real question is, can they climb it? And similarly, the value of Palantir depends on its future growth potential, not just its current earnings. He even brought up Buffett's annual shareholder letter from 2000, where he said, "Common yardsticks such as dividend yield, the ratio of price to earnings or to book value, have nothing to do with valuation except to the extent they provide clues to the amount and timing of cash flows into and from the underlying business." The key takeaway here is that while the PE ratio can offer some insight, it's not the only thing that matters. The real value lies in the company's ability to generate cash in the future. Right now, Palantir has a market cap of about $190 billion, and for its valuation to make sense, it needs to generate $86 billion by 2035. That's no small feat. Palantir is currently making just over $460 million, so it's got a lot of growing to do. But the analyst thinks it's not impossible. With its massive market opportunity and the value it provides to customers, there's real potential for growth, especially considering the company's recent success in bringing in new clients. Just in the last 3 months, Palantir signed on 82 new customers. And with U.S. commercial revenue growing 64% in Q4 2024, it's clear there's momentum here. Palantir is in an incredibly exciting space. And while there are definitely risks, especially with the rise of AI and the regulatory challenges that could come with it, the overall potential is hard to ignore. So the real question isn't whether Palantir's PE ratio is too high. It's whether the company can continue its impressive growth. And based on everything happening right now, there's a strong case for believing it could. And here's another really interesting take. One analyst made a pretty bold prediction, saying that Palantir is going to beat the market no matter what. He broke it down by pointing out how Palantir has come a long way. The company has been around for a while, but in recent years its growth has really taken off. A lot of this has to do with the hard work Palantir has done over the years and the new technology, like AI, that's created an entirely new wave of demand for what they do. Palantir's software helps companies and governments collect and use data in ways that can completely transform how they operate. It might sound simple on the surface, but in reality, it's far from mundane. For instance, Palantir is working with a major bank to automate tasks that once took 5 days. Now they're done in just a few minutes. And Rio Tinto, the mining giant, is using Palantir's AI platform to handle complex problems that were previously out of reach. Over the years, Palantir was known for its government contracts. But with the AI boom, it's been seeing a surge in interest from commercial businesses too, especially since launching AIP in 2023. So why does this analyst think Palantir will keep beating the market? Well, the real growth driver he sees is Palantir's commercial customers. These companies are able to use AI to transform their operations, and Palantir's been making it almost effortless for them. As a result, Palantir is seeing tremendous growth in its commercial sector. What's even more exciting is that Palantir's still in the early stages of this growth story. They have 382 U.S. commercial customers right now, but there's plenty of room for that number to grow. With the AI market expected to explode from $200 billion to over $1 trillion by the end of the decade, there's no doubt that demand from businesses looking to stay ahead in the AI race is only going to increase. Given all this, it's easy to see why the analyst is so confident that Palantir will continue to outperform the market. And looking at Palantir's current momentum, it's hard not to agree. It's starting to make sense now why Palantir keeps soaring, despite all the critics saying it's overvalued and on the brink of crashing. But here's where things get even more exciting. Wall Street analyst Dan Ives seems to have had a change of heart about Palantir. He's now calling it the Messi of the AI story, and he's raised his price target for the stock. Ives, who works at Wedbush, bumped his price target for Palantir up from $90 to $120, while keeping his buy rating on the stock. That new price target reflects a 15.6% upside from where the stock is right now, which shows just how much potential he sees in Palantir's future. And here's the really big part. He believes that in the next 3 to 5 years, Palantir could be worth over $1 trillion in market cap. That's a massive leap from where it is today, and it really speaks to the kind of confidence he has in Palantir's ability to continue growing and dominating in the AI space. When you have analysts like Ives, who are so bullish on Palantir's future, it's a pretty clear sign that the company has something special going on. Palantir is clearly moving into the big leagues, and with Ives's revised outlook, the future just keeps looking brighter for this AI powerhouse. Here's the thing. Palantir isn't just some random AI stock. It's got a solid foundation that sets it apart. One Twitter analyst made a great point when he said, Palantir isn't just a stock. It's a strategic position in the architecture of the future. He went on to explain that the real question isn't whether Palantir is worth $6 or $100. It's whether it becomes an essential tool for how governments and businesses operate in a world that's increasingly driven by data. If you're thinking about the stock in terms of short-term price fluctuations, like focusing on quarterly results, you're missing the bigger picture. But if you're thinking about Palantir in terms of decades, that's where you see its true potential. The idea is that Palantir could end up being the core operating system for decision-making at a global scale, helping organizations make game-changing decisions with data. If that happens, today's price movements really are just noise in the grand scheme of things. With all of this in mind, it's clear that Palantir is more than ready to dominate the AI industry. The company has been making some serious moves, and right now, we should just take a moment to appreciate and celebrate everything it's accomplished. CEO Alex Karp recently shared his excitement with shareholders, saying, "We're doing it. and I'm sure you're having just as much fun as I am. He emphasized how Palantir is all about the bigger picture, focusing on its long-term goals and vision, rather than getting caught up in short-term noise. Palantir's dedication to serving the West and supporting the US is something they're extremely proud of, and Karp's words reflect the confidence and pride that the company has in its future. With everything Palantir is doing, it's no wonder why the stock is gaining so much attention and why the momentum seems unstoppable. As Karp said, "Every Palantirian, we are crushing it." And based on where the company is headed, it's hard not to agree. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.